So maybe let's just get started. Ilana, I'll have you go first. Each of you just give an overview of your background, your current fund, and also an overview of your investment focus, sector, stage, initial round size, et cetera.
Okay. Hi, everybody. I'm Ilana Diamond. I actually started my career post-graduate school at a consulting firm as well, and I spent about 7 years there. After that, I joined a small consumer electronics company, which we helped grow. It was called SEMA Products. Some of the brands that you might recognize are First Alert, Cherokee Electronics, MGM Studios. We designed and developed consumer electronics accessories. We manufactured them mostly in Asia. We were one of the first contract manufacturers in Asia many, many years ago. And then we sold to folks like Best Buy and Walmart and Target and Amazon. And we eventually spun out another company, which is where I learned about VC. I first learned about VC when I had to raise it. And we sold both of those companies in the 2010 range. And around that time I was thinking, it was interesting to sit on our board with the VCs. What they were doing looked exciting. And one of the VCs who had looked at our company kindly offered to let me be their Sherpa and follow them around and learn something about venture capital. And while I was doing that, Jim Jen was thinking about starting a new hardware accelerator here in Pittsburgh. And my background was manufacturing, designing, and developing hardware products. And I was fortunate enough to get the opportunity to help co-launch that and grow Alpha Lab Gear here in Pittsburgh. And after that, when we were getting ready to raise our second fund, I was approached by my current partners who were launching a venture fund, an early stage venture fund, and they were looking for somebody to be the managing partner, and I was fortunate enough to have that opportunity as well. So I'm currently the managing partner of 412 Venture Fund. We invest in early stage companies from Pittsburgh and actually anywhere in the United States. As long as it's incorporated in the United States, we can invest. And when I say early stage, it could be late seed or Series A, and typically these are companies that have product in the market and customers we can talk to, and that is key for us because we don't want to be evaluating whether a technology has promise. We want the customers to show us that. Our typical check size starts at about $500,000. It can go anywhere up to close to $2 million if the company is at a Series A level, and that would be our only and last investment. We can lead or we can follow. In terms of categories, we love deep tech. We like robotics and robotics enabling technologies, sensors, AI and machine learning. We do some B2B SaaS as well. We don't do consumer products. We don't do pharma or drug discovery. And we're very, very cautious about medical devices because we're a smaller fund, an earlier stage, and the time frame for our fund is around 10 years, and typically medical device companies that haven't passed FDA would require longer than that and a lot more money than we could reasonably expect to contribute. So that's who we are.
Great. Nick.
Sure. Thanks for having me. I'm excited to be here with everybody today. Nick Shapiro. I am, I guess, approaching 20 years in investing in finance. I started my career early on in private equity, really digging into understanding kind of what levers moved different types of companies. So I was at an industry agnostic investor that was fairly high volume, and we spent a lot of time both underwriting the equity check, but also underwriting debt as well. And so quickly learned about a lot of the different aspects of the cap table, in addition to the capital structure of a business. From there, spent a few years at the Brinks company, the armored car business, which is large multinational, was part of the corporate development and strategy team there. And a lot of our mission was really to take what was an an old historic brand that was really well known and stretch into new higher margin businesses. And that involved a lot of international deals, and it also involved a lot of thinking about investing in some earlier stage companies that could leverage the brand, leverage the security know-how to scale into new markets. From there, spent a few years in consulting, working on corporate development topics with some large public companies. But I missed having skin in the game and that kind of long-term relationship that you build with companies and their founders. And so I joined UPMC Enterprises, and I'm now in my 9th year with the team. So UPMC Enterprises is the innovation and direct investing arm of UPMC, the health system. So, at the broader scale, I think a lot of folks are familiar with UPMC, but over 40 hospitals, over 4 million member health plan. We have an international division that's operating hospitals abroad. And then Enterprises is really focused in on 2 areas. One, translational science, which is more of traditional life sciences investing. So think about that long FDA approval process that Ilana mentioned. So heavily invested in therapeutics, and then diagnostics and med devices. My team, Digital Solutions, the other side of the house, is really focused in on healthcare technology, tech-enabled services, and healthcare IT. So kind of everything that UPMC would do or need access to that isn't in that life sciences category. We are a balance sheet investor, so we have the ability to be more patient, invest in something at the earliest phases, and really kind of see it through. So we're able to invest across the life cycle of a company, which is, I think, a differentiator. And we can be patient. The things that I think for us are real differentiators are our ability to think about that customer relationship, and it doesn't mean that every portfolio company has to be a customer or has to be a vendor to UPMC, but rather how do we help shape the growth of those companies, and that can be leaning into different aspects, and I'm sure we'll go into some of those details. And the other part is really how can we help with technology co-development and thinking through the ways that we can add value to those businesses. So, because we're stage agnostic, our check size tends to vary based on where that company is in its life cycle. But we will flex up and down based on that, and often can invest throughout that life cycle.
Great. Actually, Nick, let's stay with you because you were starting to get into it. Like, how do you assess startups? Kind of what framework do you use, or how do you think about them when you're meeting them? And there's at the earlier stages, there's a lot of unknowns. So how do you look at that? And then also, how are you thinking about does this one have the potential to be a large opportunity?
Sure. So we spend a lot of time thinking, obviously, about the problem, and what's the problem that we're solving with this company, or that these founders want to solve. We're looking at what's unique in terms of their solution, and then certainly that team is critical at the earliest phases. I think we index higher on the team and on that problem size, and then in more mature companies, we're thinking about pulling that through and thinking about the economic story, and you have some track record to evaluate in terms of kind of more of that later growth investing. And so, what is it going to take to accelerate and help them pull through more pipeline, get them to more potential customers, and grow. I think when we dig into that problem area and the solution, I think at the earliest phases, a lot of the time it's thinking about where, is the problem they're solving ultimately delivering return on investment to the customer. And is that customer, right, the decision maker? And we can go into the complexities of healthcare in this discussion, but that's unique in healthcare when you have a payer and a provider model, and then the ultimate downstream, oftentimes beneficiary who is the patient, but the patient has maybe the least decision making ability in that process.
Ilana, how about you? How do you think about it? And I know you've looked at companies sometimes at the very earliest stages, even pre-formation. So,
yeah, at Alpha Lab Gear, absolutely. Yeah. So I agree with just about everything Nick said, especially the comment about team at the early stages, because I would say more than half the companies we invest in either change the product or change the market, or change both along the way when they're at that very early stage. And from our point of view, a strong team with a good product idea is far more likely to take it all the way than a great product idea, a great technology, but we're concerned about the team and particularly about the team dynamics. So we do spend a lot of time, with the team and trying to understand their approach, their interest in solving the problem, where they're coming from. The other thing that I'll say is that we care a lot about a team who knows what they know and knows what they don't know and is open about it and is looking for help in solving the things they don't know. So those are the kinds of teams things we're looking at. We also want to see some good thinking around the business model. How are they going to make money? Both short-term and long-term. And if short-term, the idea is they're not going to make money, that's okay. But they have a long-term plan to get there. The other things that we look at are, have they thought deeply about their competition? And are they realistic about who their competition is? And have they really talked to their customers and tested the product with them? And are they listening to the customers? And that's why, one of the most important steps in our process is talking to customers that are already using the product. Because we can't be experts in every field. And it really comes down to, do the customers feel this is solving the problem? Not does the company believe that? So that's our process.
Got it. And Nick, how about from your end?
Yeah, I think I'll pull on the thread around experts, right? And I think this is one of the things that at UPMC that we have an unfair advantage on is access to clinicians and operators within our health plan who can really give us a read on whether or not something hits the mark, and also where can we run a study with that company to figure out if and prove out and maybe publish even on the ROI that solution delivers. So absolutely agree that having the ability to pull in experts is important, and at the same time, we also make sure and think about how do we also get out of our own echo chamber and not build to N of one with a company. So UPMC is, has the ability to be one customer, but we want to make sure that this is something that can scale for, throughout the U.S. and potentially globally. And so we have to make sure that we are, working with experts at other health systems and folks who have experience kind of beyond our four walls. So that part's important. And I think with the that team dynamic, there'll be tons of ups and downs along the way, and certainly the earlier the company, the harder it is to pull in a great substitute executive, right? The passion for that idea, the willingness to make great sacrifice and run through walls for it. You need that in the team, and then as that company matures, there's ability to say, hey, the company will change in terms of its needs at times, right? From a group of folks who are sort of jack of all trades type folks who can figure out a problem to bringing in people who have very specific, dedicated skill sets.
I completely agree with that. And interestingly, we don't have access to a clinician network. However, our limited partners, the folks who have invested in our fund, include a lot of experienced entrepreneurs. In fact, I think 70–80% of our investors are folks who have built, scaled, and exited companies, a lot of them from CMU, a lot of CMU companies. I don't know if it's any of the ones you were mentioning, but a couple of them are unicorns as well, and several have had very nice exits. And those folks are super helpful in evaluating companies and being board members for us or advisors. And I think that's critical as well, is using them to help evaluate the company, but also using them to help scale the company. So I agree with you that expertise, having access to that is really critical.
Ilana, you've invested, and you invest in hardware robotics companies. Are there differences in how you look at it, especially in the early stages? And even getting that sort of customer proof, because it may take more money to get to a customer product. So
you're absolutely right. And I'd say one of the things that we really look at is manufacturability. So if it's a hardware product, it's great to have a good idea, and it might perfectly solve the problem. And when you build one or two of them, you may give them to customers and they love it. but do you have a way to manufacture this product efficiently, at scale, at a price that customers are going to be willing to pay? And so one of the things we look for is either a team that has manufacturing experience, because that is very, very different than just building one or two prototypes or coming up with the idea. That's a process. And if you don't have it on the team, do you have an alternative? Have you identified some manufacturing partners? In some cases, we've invested in companies where we co-invested or co-led with a partner who could do the manufacturing. Right. And that's ideal, because now we know there's somebody as invested as we are in helping get this product manufactured at scale, at a good cost, and with good quality. So that's one of the things I'd say we really look for in hardware companies.
And Nick, I mean, your fund's unique because you have both the sector focus on healthcare and also maybe the CVC corporate perspective. Again, are there differences in how you evaluate and think about this?
Sure, and I think if you extrapolate to the broader corporate venture capital world, I think you have to kind of draw a distinction between investors who are looking to generate cash returns and ultimately be a financial investor, even if you are a strategic. Versus groups who are really looking at, can we acquire a business? So are we putting a toe in the water to test it, see if this works, and then pull it in as a part of our M&A strategy? At UPMC Enterprises, we're really focused on the former. So our mandate is to both help the system with bringing new technologies in, and also taking know-how and expertise within UPMC and commercializing it elsewhere. So we'll do both, but at the end of the day, our goal is not to control those companies. Our goal is to help them grow into independent businesses. And so, that's kind of one thing that I think is unique about our approach, but or at least is a defining characteristic of how we approach the market. In the healthcare world specifically, we're very cognizant of regulatory environment. Part of our team is focused on things that require FDA approval. The other part, we are thinking about all kinds of healthcare information regulatory requirements. So, a lot of our team is actually dedicated to working with our portfolio companies and thinking about how do you get through the enterprise architecture review committee of the technology side of a health system. And UPMC has one of the most rigorous processes and has been very forward thinking about what's required from that security protocol perspective. And so our folks have been able to work with that team to navigate and help our companies understand what it takes to be able to go to every system and say, hey, we've got TSA PreCheck, right? We've passed through this and we've done high trust certification, et cetera. So those are things that can help kind of scale.
So kind of looping back to sort of the premise, the theme we were talking about, like, is there an example, and you don't have to name the company, but company that in your portfolio, or maybe even one that you saw and didn't invest in, where the potential for kind of that large scale and value was obvious early on, or that the market size was a question mark. Could be either side of this equation that you had to get comfortable with. And, so either of you, if you want to jump in with an example.
Sure. Actually, I have one that's CMU spin out that I won't name, but okay. It was kind of an advanced materials company that could be used in some industrial components. And in the beginning, when we saw the company, we were really excited about the technology. We were also very excited about the team. We had invested in another company that had came out of the same lab, but we weren't 100% sure what the ultimate application would be. And some of the applications were in areas like automotive that can be very, very, take a long time, years. And as I mentioned, we're a 10-year fund, and automotive can take that long and longer. But it was early enough stage that we could invest at a valuation where we could say to ourselves, even if they don't identify the killer app, it's likely someone would buy this for many multiples of what they're valued at today. And we like the team and we like the technology, and we can see off in the future a number of big things. They had some very niche applications that they were already delivering to customers and delivering value.
Right.
And we also talked to some of the experts who were investors in our fund who said, yeah, I could see a lot of application for this. What ended up happening just recently, I'm going to say 3 years after we invested, is they had been selling directly into the robotics market. And it was mostly these sort of humanoid robotics, which that hasn't scaled yet, that market. Okay. But they identified some applications where they could sell to component manufacturers and become a component in lots of other industrial applications. And now they don't have to sell to every customer. They don't have to service the product. Every time this customer's product is sold to a robotics company or to an automotive manufacturer or to any industrial use case, their product just sort of comes along for the ride. And the company is now really starting to scale, and we're excited about it.
Okay. And I know you didn't want to name the company, but that founder may or may not be speaking later today, so.
Oh, yes, one of the founders. You're right. You're right. And it's actually the person who we'd invested in his other company.
Yeah.
Yeah.
How about you, Nick?
So I can give an example kind of at both ends of the spectrum. Right. On the one where the market was very obvious and the opportunity, we've invested in a company that, again, we won't name names, but they are in a market where there's large incumbents. We know that it's a multi-billion-dollar part of the industry. There's large incumbents that are generally disliked by their customers, but there aren't alternatives. And we had a founder who had been in the executive teams at these legacy players, knew what needed to be done to change it, and had to go out and start a new company in order to disrupt it. And so in that instance, you have a pretty good feeling that this is an execution play and less of a market creation play. The other end of the spectrum, we've had a number of investments that we've spun out where we see something that's working really well within our own walls or with some of our partners, and we think that there's an opportunity, but we need to help create the industry, so to speak. And when you're creating that market, you have to do things that are a bit different. And what we've worked with some of our founders in those instances on are things like working to shape the regulatory environment. So you're involved in some of the larger industry associations. You help create and look for ways to turn the market in your direction beyond just, hey, we have this great product, but it's how do we make sure that we're helping other people see the path to creating this market as well, and we have a solution.
Okay. I'm going to ask one more question before we take a few questions from the audience. How are you thinking, and I know AI obviously has been pervasive in the business conversation, honestly, and actually has been the theme of our last couple of forums. But so, how are you thinking about this? I'm sure you're seeing a lot of pitches that have it in the pitch deck, but then how are you defining it? How are you evaluating it in the context of investments? And
I'll go first this time. It's fair. I think on the AI front, certainly we see it in a lot of the companies that we look at. We've invested in a few that are generative AI focused companies, but I think from a healthcare perspective, first and foremost, right, there's concern about patient safety and that regulatory environment, what's allowed and what isn't. But there's tons of opportunity in the administrative world of healthcare that you can automate in new ways and things that you can do to improve the patient experience, even if it's not in delivering medicine, right, or clinical care. We, I think, are excited about and look at companies. I think it's almost a requirement at this point for a company to have an answer to how are you using AI, but it doesn't need to be this is how we're using AI to serve our customers. Sometimes it's this is how we're building our product and building our company and spending less money doing it. This is how we're being really efficient in our execution. So that to me is a huge plus and sort of where I think the excitement is, and you move away from the overhyped piece of it. The other elements of it, right, that you have to be really careful about are your intellectual property. And you want to make sure that as you're working with these companies are working with large language models, that they're not putting their proprietary information in and effectively leaking out, for example, all of your code. Sounds simple, but how you put the right firewalls around the way that you're interacting with AI is really important. And so I'll stop there and pass it to you, Ilana.
Okay. So, Jim, you made an interesting comment about putting AI in your deck. Yeah. And I just, to the entrepreneurs in the audience, I agree with what you said, Nick, about how you're using AI is important. But just putting it in the deck and saying this is an AI product, that's sort of one of our pet peeves. So, it doesn't have to be an AI product. It can be a software product that uses somebody else's AI. In fact, it's walking a little bit of a fine line, but there's some really big companies out there that we can all name that have built the underlying engines. And honestly, a small startup with raising a few $1 million that is planning to build their own engine, we would look upon that with a lot of skepticism. But a company that says we're going to use that underlying engine, but we have this unique take on the market. We have something protectable in how we're going to apply it, or we have some knowledge or some data, that we're going to add to it. That's really exciting to us. And it's a little bit like, I think about it like the internet 20 or 30 years ago. You didn't want to be creating a new internet, but somebody who had a unique take on how to apply it and use it and was out there first, that's something that we find very, very exciting.
Well, let me ask both of you as a follow-up, and then we'll take questions. It's just, how do you differentiate? Because sometimes during your due diligence process, you're trying to figure out, all right, is this unique? Is this protectable? Or, maybe it's not that unique a take. So any insights into how you dig a little deeper?
CMU is our hidden weapon. I mean, it's really amazing for just about anything that we're looking to dig into. There's usually somebody here who's an expert in it, a world expert, and a lot of those folks are investors in our fund. But even for the ones that aren't, we'll rely on that expertise, and we will ask the founders to speak to one of our experts, and we'll rely on what they say. So that's certainly not my expertise. And even my partners, I have 2 partners who have some expertise in that area, but we rely on CMU, to be honest.
I think from our perspective, we have a technology team that is helping us conduct diligence on any company. And so we lean more heavily on them when we're talking about artificial intelligence. And for us, sort of when we think about how a health system could deploy artificial intelligence, it needs to be behind the firewall of the system. There's a lot of different things that you have to go into from a patient information security perspective and a patient safety perspective. So that for us is sort of the guiding light. And we think about, does this team have that right? And then when you go to sort of differentiate between them, it gets down to, do they have the right playbook, and are they open to and thinking about the right elements of what's going to be required to do it? And then oftentimes in today's environment, there is a first mover advantage as well. And so, do they have the ability to, get to at least a few early pilot customers so that they can prove it out and begin to quickly, scale up with a broader market and get ahead of some of it. But the other thing that we also think about too is, where are some of those large incumbents going? And so we've mapped and understand sort of what we think are the areas that will ultimately be dominated by a few large players. And with that, there are still opportunities, I think, for companies to, if they have a lead, to be in a very nice pole position to be acquired at the right time. So you look at it kind of from both angles. Great.
Do we have any questions from the audience? And I think we have folks with mics maybe. Yep, coming your way.
Hi, thank you for being up here and speaking. What are some steps to defining regulation to help define markets?
So what we think about you see a lot that's going on with CMS today in the healthcare world, and so they are running programs around innovation. It could be things like applying for and working with a clinician to get an innovation grant. And if you've demonstrated that with CMS, that gives you the ability to then take that and show the work that you've done. Also, oftentimes, right, have a path to reimbursement for something that's new and different, or funding for it, and be able to then take it to one of the largest payers in the market, the government, for whether it be Medicare Advantage or other managed care programs. So that's one example of beginning to help kind of shape the market as to how how care is delivered or how a program is run, especially in the value-based care world.
So I'd say, outside the healthcare area, we run into this a lot. There are industry trade groups that establish regulation, and we encourage companies where regulation is going to be an important factor for them to get involved with those trade groups, get on the committee that's making the rules for regulation in their area, and influence it. And that might sound like a heavy lift, but honestly, a lot of the technology organizations, at least the one that I was involved with, the Consumer Technology Association, they struggle to get people to, because it's a volunteer role, to volunteer their time and be actively involved. And if your company puts an engineer or a CTO on that committee, they typically have a real voice. And if nothing else, even if they don't manage to influence the direction, at least they know what the direction is and can make changes to the product ahead of time.
I think we had another question to your right. Yeah.
Thank you both for your insights. Fantastic. I want to go back to the AI topic. Last year, if I paraphrase, the topic of conversation here related to AI was, will the promise be realized? And I think this year we're kind of making the assumption that some of the barriers have been overcome, and we're starting to get traction for AI, especially as it relates to new companies. And I'm curious if you're starting to see, beyond the AI in the box, are you starting to see just more innovative, more creative ideas that are resulting from the use and application of artificial intelligence in the businesses you're investing in, or even the people you're talking to?
I mean, absolutely, right? There's I think opportunity that it's not my area of expertise, but certainly what we are seeing are companies in the life sciences space be able to cover ground more quickly, right? In terms of evaluating, pathways, evaluating proteins, right? Just the raw compute power and the ability to to leverage the brains of people who are working on these problems, but in a way that gives them, multiples of time, right, are I think really important. Now, not an area where I'm spending a ton of time, but we certainly see that. And then I think, again, with respect to, the administrative pieces of in our case, healthcare, we're seeing companies be really thoughtful about not just, hey, I have this one narrow specific solution, but how do I think about, almost from a consulting perspective, how do I think about training models to be able to solve any problem? But if there's, tasks that are administrative in nature and are repetitive throughout, there's a lot of opportunity from an implementation perspective. And as you get smarter and better at that, you can turn the crank faster. So I think those are a couple of areas where we're seeing more and more innovation. We've certainly seen the promise of things like, generative AI for clinical note documentation through our portfolio company, Abridge, which has obviously been a big success locally and was founded by a former colleague.
And, sort of pulling on that thread, I'd say that we're seeing more and more companies use AI internally in their processes to do things more efficiently, whether it's, customer service or maybe generating marketing materials. We're finding that there's that use case as well beyond incorporating AI in their product. And that's exciting because it makes the companies more efficient.
Actually, if I could ask a follow-up on that, then is that affecting the size of checks you write or the traction levels you're seeing from the startups?
So we're so early that they have this in mind. And what they're, a lot of times our check is to help them implement it, to hire the people to implement it. Although there are more and more startups coming out that are providing that as a service. So we'll get a company that says, we want to implement AI in our customer service, and there'll be another startup that develops that product, and sometimes it's more efficient to just use the service that they've provided. And one of the things we like to do is to make those connections. Maybe we didn't invest in that customer service startup, it was too early, or we had somebody else in the space, but we can recommend them to another startup. And that's great, because I think one of the things you always told corporations, if you're looking to help a startup, a check is nice, but being their early customer, sometimes that's even more helpful. So,
Maybe time for another question. We have one here. Yep.
Yes, this is a great panel. My question is, if you have a startup that has a technology and a lot of different, that can be applied in a lot of different areas.
Oh, yeah.
If you have a customer that has a technology or a startup that has technology that they're starting in one particular area and has broad applicability in a lot of areas, and they're faltering in that first area, how do you help them pivot to apply that technology in a new place, or do they just kind of close down?
that's such a delicate timing thing, isn't it? And I think for us, one of the reasons we really evaluate the team is we're looking for a team that will work really hard on their thesis, but will know when it's time to pivot. We call that strong opinions lightly held. So you've got a strong conviction, you're gonna work like heck to make it work, but that conviction is held lightly enough that if all the data tells you this isn't working, you're willing to make that change. And that is part of our job, especially if we've taken a board position, is to help them ask the question at least, is it time to make a change?
Probably have three thoughts on that question. The first would be around, if it's a specific vertical, is it an issue around that vertical? And if we look kind of to adjacent or other verticals, are there places where maybe there is better pull through, right, or better tailwinds? The second would be, it's a question of are we too early? In which case, do we need to potentially cut back on our burn and try to weather the storm for a bit and let some of the market catch up in terms of the adoption? But then the third thing is, when you think about it being broadly applicable across multiple industries, is also thinking about is this vertical specific that we should be going down, or is our customer ultimately maybe, or should we be middleware, and is there maybe a customer that is a larger sort of direct seller into these individual verticals that we should be partnering with? So maybe the other part of this is that sometimes becomes a question of, is this ultimately going to remain a company, or should this be a product or an offering under a larger umbrella? And do we need to think about strategic M&A?
That actually just gave me an idea, which is, if you're thinking about multiple places you can pivot, I would be thinking about places where they don't have another solution, another good solution. And rather than the biggest market, especially if you're too early, that's what gave me this thought, especially if it's very early in the development of the market you originally chose. Maybe there's another market that's much smaller, much nichier, but they don't have another good solution. And at least you can get started and prove your solution works, and that can help you with adoption in the larger market.
Yeah, certainly a big takeaway from my early days in private equity and going to some of the least interesting corners of the business universe was you could really make an incredible business out of a small market that you could dominate.
Yes.
All right. Well, with that, thank you, Nick. Thank you, Ilana, for really kicking off today with this conversation about how you look at investments and how it varies across the different sectors that you invest in. So please give them a great hand. Thank you.